Hello and welcome back to the channel. Thanks a lot for tuning in. I hope you're doing really well. Let's take a look at Ethereum's price chart. Ethereum is still moving within a confined, restricted range. If you've been watching the videos I made for the last 2 weeks, 2 weeks and a half about Ethereum, you would remember that I had 3 counts going on. 2 bearish and a bullish one. With the recent price increase that we've seen since the low of 10th of October, I made some changes. I scrapped the most aggressive bearish count I had simply because we failed to make a new low compared to this one, and we made a new high compared to this one. For this aggressive bearish count that was in green to remain alive, we would have liked to see price break this low here at 2,307 and then continue aggressively in 5 motive waves. It did not happen, so I canceled this count, and we are left now with a bullish and a bearish scenario, which is good to have alternative. The bullish count had also, if you've been remembering and watching the videos I made about Ethereum, the bullish count had very low probability on my agenda simply due to the length of this retracement here. That is a wave 2 correction. We went all the way down almost to the start of wave 1. And I was simply arguing why would price need to go that deep down if we were in a motive section like an impulse wave. But I kept it because it was not invalidated. Now, with this recent move high, even though we haven't made a new high compared to 2,730 on the 27th of September, it indicates that the bullish scenario has gained more strength. Yeah, it's not a 50-50 between the bullish and the bearish count, but the bullish one is a lot stronger than it was 3 days ago. So let me start with the bearish counts. Bearish count evolves in a triangle, an Elliott triangle, and it has a 3-wave structure for each of the segments. So you have wave A, 3 down for B, 3 up for C, 3 down short and fast for D, and a 3 down for E. So potentially this triangle is complete, and this triangle would result in price moving down towards wave 5 of this correction, and the correction would actually not be over. Triangles within Elliott wave, they happen in wave 4 or wave B of correction, so wave 4 impulse. And the reason why I am saying that there is a possibility that the correction that started since mid-March is still not finished is if you look at the count, you have an A, B, C, but the C is not finished. The C is composed of first wave, second wave, corrective, and then you look for a motive wave for wave 3. So we have a wave 3 that is rather extended, that formed the low of early August at 2,129 or 30. This wave 3 is extended, and what we could be in at the moment since early August is a triangle, and triangle they form in wave 4, which is what we're looking for after an extended wave 3. And the target for wave 5, once we complete this triangle, the target for wave 5, you take the start of wave 1 and you go to the assumed end of wave 4. And since we have an extended third wave, it is unlikely, possible, but unlikely that wave 5 will also extend, and therefore we would look at the wave 5 equal at 100% of wave 1 extension. So that would mean that price would go for a wave 5 completion at 1,900 and some change approximately. And this would conclude this wave 4 correction that we started since mid-March. From the top of wave E of this ABC triangle of wave 4, we would now look for price to move aggressively down in a motive sequence, like 5 wave down. An indication that this triangle is unfolding would be, there are 2 actually. If price shoot up, I think we are close to this invalidation level here. which is the top of wave C at 2,725, I think the right. I barely use the magnet because it's driving me crazy. So bear with me if the invalidation level I give are not accurate to the dollar. You might have a different chart. We are on Binance. I think the top on Binance was 2,730. Let me check. 2,729.54. Yeah, go deal with that. So you get the idea. Yeah, the invalidation level is a make a new high here. So you would have actually a E that is higher than the C, and that cannot happen in a triangle. So that would therefore invalidate this triangle, and it would make us go towards the motive bullish scenario that I have. I will talk about it in a bit. The second invalidation level is if we go down, and I think we might, because if that's the top of E and it's respecting the downwards trend line that is capping the price and has formed the A and the C, if we're going down now, we would therefore break. The first indication is if you break this low here, which is the bottom of this B wave of this ABC towards E. Yeah, so that's the first indication. The official indication is that you make a new low compared to the low of D. And that low is actually exactly at 2,311. So break that officially, you can consider that this triangle has played out. And now we're making a motive impulse wave to the downside to make wave 5 or 4 towards 1,900. So that is it for the triangle scenario, which is the bear case. Let's look at the bullish counts now. So the bullish counts is completely different because it assumes that the wave 4 has completed. And we have a 5-wave move down here with the wave 4 being extremely tiny short. Yeah. This bullish count has made an impulse, wave 1, a corrective wave 2, and within the wave 3 that is unfolding with a minimum target of 3,386. More often than not, that's the target. I always say minimum, but that's not to be. I need to change the way I talk about wave 3 targets. More often than not, you would aim for the 1618 for a wave 3. Within that wave 3, we have a 1-2 already done. So that's essentially a 1-2-1-2 setup. And within this 1-2-1-2 setup, the recent move higher, we have a 1-2 also down. So this 1-2 is the indication that the bullish count has actually gained more strength, because we would not have had this 1-2 setup if we were still in the aggressive bearish count. So this is what I wanted to highlight. Now the question is, where is this 1, 2, 3, 4, 5 going to end? Did we already complete wave 3? We look for the 1.618%. as a more often than not target for a wave 3, and it's possible that we completed wave 3, and now we would be looking for prices to make a fourth wave, and this fourth wave would actually retrace down to maximum of 50%, which is 2,511. Now, there is a caveat to that. You can have prices during a wave 4 construction that go into the territory of wave 1 in the case of a leading diagonal. What is important is where is the wave 4 ending. The wave 4 cannot end, if this is an impulse, the wave 4 cannot end within the price territory of wave 1, which is this price territory here, from 2,311 up to 2,518. If we have price during the wave 4 construction, if the price ends during within the territory of wave 1, then you are not in an impulse, you are in a leading diagonal. So essentially, you would have a price structure that would look like something like that, wherever wave 4 ends, and it would, you would need to look therefore for a 1, 2, 3, 4 within the price territory of wave 1, and then a 5-wave move up, probably, and that's what also has provided more strength to the bullish count. You have a supply-demand overhead resistance formed on the 24th of August with a ton of supply still being untouched, most likely starting 2,776 up to 2,827. If price do get into this this zone, I don't expect much battle here, because you can see here it was already tested and I think the supply has gone. But the upper part above the purple line, this is uncharted territory, at least for this micro look. So it would make sense, if we are doing a wave 4 correction now in red, that price do get within the price territory of wave 1, and that the wave 4 ends up within that price territory of wave 1, you would have a leading diagonal unfolding with a fifth wave still to be done. Once the fifth wave is complete, you would look for 3-wave move down as an ABC correction for wave 2. So essentially, you would have a 1, 2, 1, 2, 1, 2. So that is 3, 1, 2 all together, and that is very, very bullish. That is a usually the 1, 2, 1, 2 setup is already bullish, meaning that you would have a 5 impulse wave within an impulse. Now you would have 5 impulse waves within an impulse that is also within an impulse. So that could be a very bullish outlook for Ethereum, but we're not there yet. That's only speculation. For the moment, I think we can look for how the wave 4 unfolds, how is it going to be structured, and also where will the wave 4 end. If it ends above the price territory of wave 1, then we can consider this move as an impulse, a normal one, and we would look for a fifth wave within the expected Fibonacci extension. However, if wave 4 ends within the price territory of wave 1, then we can assume that this is not an impulse, but it's a leading diagonal. Yeah, and therefore predicting the fifth wave is going to be tricky. I would rather look at the overhead supply zone for a potential inflection point. Yeah. So that's it for the video about Ethereum. I hope you liked it. Leave me a comment, drop a like also, subscribe to the channel. I wanted to thank also the most recent person who subscribed to the channel. I can't see the name of everybody because it's personal preference, whether you want to share your name or not with the channel owner. Personally, I don't mind if I can see your name or not. It's just maybe it's always nicer to be thanked live on the video. So the last person to subscribe to the channel, and forgive me if I butcher your name, Ayesh Dikumbura. Ayesh Dikumbura, namaste. Thank you for subscribing to the channel. I made an assumption that you are Indian based on your name. If you're not, please don't get mad at me. I do my best here. Anyway, thank you all for watching this video. I hope you enjoyed it. If you have not subscribed to the channel, please do so. Otherwise, have a good day. Take care of yourself. I'll speak to you soon. Bye-bye.